Well, Mahindra Logistics reported a weak set of numbers with its revenue and net profit declining nearly 7.5% and 19% compared to last year. To give us more details on the quarter gone by, joining us now on the show is the CEO Rampraveen Swaminathan of Mahindra Logistics. So, sir, to start off with, what were the factors that led to this decline in the revenue and the net profit of the company in the third quarter of financial year 2020?
Good morning, Sumit. So as you know, I think our business is got a fairly large position in the automotive market. We have generally been historically strong in that segment, and given the downturn in the auto market, we have been impacted by that. So that has been a large factor for the year-on-year decline in revenue. Overall revenue declined by 7.5% year-on-year, but that was a mixed bag. Our revenues to the automotive segment actually declined by close to 15% overall, in line or in reflection of the overall slowdown in the auto market. Despite that, we actually showed resilient performance in non-auto segments. Our non-auto SCM business grew by nearly 12% year-on-year, driven by strong performance in e-com, FMCG, and pharma markets. All those our sales to all those markets grew by nearly 25 to 30% year-on-year. So there's a mixed bag. We did obviously see the broad impact of the auto and a slowdown as well as slowdown in mining and materials, but we had a strong bounce back and growth in other parts of the supply chain business.
Okay.
And that helped us obviously also show a sequential improvement in revenues and earnings.
Okay. But how are things looking currently? Are you seeing any signs of improvement because of the shift or transition from BS4 to BS6? Any uptick in auto volumes?
Yes, I think so. Obviously, we did see a marginal uptick in volumes in the last quarter. I guess mostly driven by the seasonal impact, the Diwali and the festive season playing in. We are hopeful that obviously there will be a BS4 or BS4 pre-buy impact in this quarter, but it's very early to actually call out a definitive trend. I see this in two parts. The first one is, are we bottoming out? And the second question is, when do we start seeing stronger growth and recovery? So I feel that obviously we are seeing the bottoming out happening. We have seen some green shoots which start seeming to indicate that we are turning the tide. It'll probably be a couple of quarters before we can actually call any sustained recovery there. For us at Mahindra Logistics, the focus therefore has been, while we try to expand our position in auto, which has been a strength for us, it has always been to grow the non-automotive segments at a faster clip. So we've had a couple of quarters now where we've been able to demonstrate that, and we remain focused on that in the coming quarters as well.
Okay. So your margins have declined to 3.1% compared to last year if you remove the Ind AS benefit. So what led to this? Was it only because of higher freight expenses in this quarter?
No, so I think it's a couple of things. I think what you would see actually, some of this, if you look at a gross margin level, I think you will actually see that we actually showed an improvement year on year. Right, so gross margin even without the Ind AS impact grew, quarter on quarter from 7.9 year on year from 7.9% to 8.9%. Now that gross margin improvement came from better mix towards warehousing, productivity improvement initiatives, and the fact that as an asset-light business model, we are able to manage our fixed cost at an operating level in a more flexible way. What has however you would also see is a 19% decline in PAT year on year. Now that decline has been impacted by a couple of factors. First, we have strategically continued to invest in some long-term initiatives, especially around technology and digitization. And despite the short-term market correction, we have sustained those investments because we think they are the right thing for the company in the long term. The second thing we have seen is some level of an Ind AS translation impact. Because of the accounting change, there is some impact because of that. Both those factors have meant that despite a better gross margin performance, we have obviously not seen that flow through to the PAT line.
Your non-Mahindra, non-auto supply chain business grew nearly 12% compared to last year. Can you develop on what led more for this double-digit growth for this segment?
Yeah, so as I said earlier, I think if you look at our business broadly, Sumit, there's the supply chain business has the auto business, which is M&M, Mahindra and non-Mahindra, the auto and ag business. And then it has three other businesses. It has the e-commerce business, what we call the consumer business, and our bulk commodities business. So if you look at what's happened to us this quarter, while automotive, including M&M, weighed down, the e-com and the consumer businesses showed strong growth. The consumer business continues to grow based on our partners who are consolidating their networks post GST. The e-com business grew both in terms of underlying growth of volume as well as the seasonal impact because of the festive season. But both of those actually showed a strong growth, and as a result of that, our non-auto SCM business was still able to show a pretty healthy growth rate.
Okay. Your warehousing capacity has increased to nearly 16.5 million plus square feet. What are your future plans of expanding this capacity, and how is the demand for warehousing currently?
So, as you know, we don't really sell warehouse as a real estate or just a space option. What we really focus on is selling, warehousing services and value-added services such as returns processing, JITs, or even fulfillment logistics, sort centers, and so on. These are the solutions which we actually focus on, and they use warehousing assets, which we typically lease out from others. So obviously, we have continued to focus on growing those value-added services. Year on year, our value-added services and our warehousing-based services have grown by nearly 30%. And that's driven partially by the segments we operate and the services we offer. And that's something which has been a strategic focus for us, and it will continue to remain that way. We are seeing stronger growth in those services. As I said, I think there are two big drivers for it. In the consumer space, customers are consolidating their distribution networks. So they're moving from many small warehouses to larger warehouses, which requires better infrastructure, which is FM to the higher grade and higher performance standards. And we are seeing a good uptick in that, which combines both warehousing and secondary distribution or transportation. On the e-commerce space, obviously, we continue to grow our business in sort centers and other kind of fulfillment logistics options, and those are also driven by having a strong warehousing footprint. So as a combination of our strategic focus on these markets and solutions, I expect that we'll continue to grow in terms of warehousing and value-added services.
Lastly, sir, were the budget announcements in line with your expectations, or were you expecting more?
So I think it's a mixed budget, obviously. Let me talk about the positives. Clearly, I think the government's announcement around and large investment in transport infrastructure, I think bears very well for us. It will not be necessarily a short-term benefit because that infrastructure will have to be rolled out, and there will be an implementation window around it. I think it will improve logistics efficiency as a whole, will hopefully help bring the logistics costs for our customers down, and will help especially 3PL players like us as we design and implement value-added solutions to our customers. The second big positive obviously was a reaffirmation of the rollout of the National Logistics Policy. Now this policy is something which has been in works for some time. I think like others in the sector, we are also hopeful for the early release of that policy. That policy has several positive elements, in terms of creating a common marketplace, creating more formal standards, investments in more analytics, obviously investments in kind of agro-based supply chains. So that should that should hopefully throw up new opportunities for all of us in the industry, but also allow us to create better services for our customers. So both of those, I think, will bear out in the medium term clearly as strong positives for the sector. In the short term, I think how consumption plays out, whether there's a broad economic revival, and how the budget plays into it, I think is something which we still have to wait and watch.
Okay. Well, that would be all. So thank you for speaking to Bloomberg Quint.
Thank you very much.